Small caps are gonna make highs sooner than most investors realize. We're gonna go through a lot of great data today, showcasing why betting on small caps could be the winning ticket in 2024. Hey, I am Luke Downey. I am recapping our latest big money insights at mapsignals.com. And let's go ahead and get into the data. So there was a huge rotation that took place in the month of March. And this is as of March 27th, but look at these returns. For that month, energy was up almost 8%, utilities up 6%. I think the biggest takeaway here is that tech, right, that everybody wants to talk about, it was barely up and all these other sectors were outperforming. Listen, a lot of these areas are the smaller cap space, which have been unloved and battered, right? This is the only major area of the market that has not reached all-time highs, but we think that is changing. So when there is this big reshuffling that has taken place, it's important to look at the big money flows. And here we can see that early in the week, so this is looking at March 25th through March 27th. I know it's a very limited window to look at, but we have seen a huge amount of buying that was in stocks that were from 500 to 5 billion market cap, and also 5 billion to 50 billion market cap. Now, the reason I'm bringing this up is because, this buying is 3-4 to 1 compared to the larger cap stocks. There just wasn't a lot of activity. It's showing that this rally is starting to broaden out. And of course, we know that the more that this rally starts to broaden out, the better it's going to be for small cap stocks. So it's not just that, we're seeing the prices go up and also the money flows just follow small caps. We're seeing it in our sector ranking shifts. This is really very important because energy is now by far the #1 ranked sector in our data, followed by industrials, financials, and then technology. It's actually 4th and 5th place in our data. I think it just fell to 5th as of this morning. This is telling you that there is a new sheriff in town, and it's a lot of these domestic style areas of the market, smaller caps, right? And the reason for that, we know, is because interest rates are coming down. So we're seeing this whole reshuffle happening in our data. Very, very much the money is following small caps. But let's go and look at an amazing study that I did earlier in the week. So people have been saying that the S&P was up 10% for the first quarter. That is the headline that you hear everywhere right now. But here's what they miss. Small caps were up only 2%, okay? Drastically underperforms. This is what you need to focus on. When small caps are up 2% or less, right? And this is through January through March, April through December, this green bar right here tells you that they go up 17.38% in the remainder of the year on average. This is well north of the average return of the small cap index. So listen, when you have lackluster returns in Q1 for small caps, this is a time to get bullish, not bearish, and that's what we're seeing in the data. But it doesn't stop here because, as I told you earlier, the Fed, it's set to cut rates. They told everybody that's what's happening. This is the S&P Small Cap 600 again. This is looking at times when the Fed cuts rates, the economy is not in a recession, and it does not fall in a recession a year later. Look at these returns. 1 month later, small caps are up 4.8%. 3 months later, they're up 10%. 6 months later, they're up 10%. 12 months later, they're at 19.3%. Little back of the napkin math tells me that small caps will be at all-time highs, likely sooner than most people realize, and probably inside the better part of a year. So this is telling you that if small caps are due to go up 20+%, 19%, some stocks are going to double, some stocks are going to triple. This is when you really want to be leaning in, finding some of these underfollowed stocks. That is what we do at Map Signals, and that is how you win the game of investing. I'll talk to you guys next time.